So what are the topics for today? We have, on my end, I have divorce, very current topic. We have two hyper tycoons divorcing, going the bachelor life. We just want to talk about like some financial implications of divorce. So if you're thinking about it, think again, because there are some financial implications. And then I think you wanted to talk something about, family finances.
Yes. I want to ask you a couple questions about kind of the state of millennial family finances, and what's a young person to do.
Okay, great. And then finally, the last topic. It's a technical topic, but it has to do with CRT, so charitable remainder trusts. It's a topic that, to me, is kind of relevant right now. I've had a couple of clients asking me this. Usually, clients ask this after a huge run in the market. Where they have a lot of capital gains and they just don't want to pay it. Our good friend Jeff Bezos divorced some time ago.
Did you read the Bloomberg piece that came out, I think today or yesterday, about the spat with the National Enquirer parent company?
I didn't finish it. Did you?
So sick. Yeah, I highly recommend.
What's the rundown here?
The rundown is that Jeff Bezos flexed on this media conglomerate so hard, and just outmaneuvered them at every turn. But even though it ended up with him getting divorced and getting outed, it turns out that his girlfriend's brother was the leaker.
Was he actually the leaker of his images?
Yes,
Got it.
directly to the National Enquirer.
We also have the second tycoon divorcing our fellow Bill Gates, and it rocked the charitable world because they are one of the biggest charities in the world. They have both, Microsoft, I would say Bill Gates' money, but they also have Warren Buffett's money. So, or they're planning to manage that. I think Warren Buffett keeps giving them gifts annually. The big question is for regular folks when there's divorce coming in, when people are thinking about divorce, they also have to think about the financial aspects of it. Obviously, like personal aspects will always usually trump financial aspects, but you have to be cognizant of those financial matters for a start. And this is something that I've seen across when I've talked about the issue of divorce. Expenses as a joint couple are usually much smaller than as separate. Just as a starter, as a two separate people, you usually have to have two residences, and that itself is pretty costly. So if you are with your wife and you're paying a mortgage and it's, let's say, $6,000 separately, most people don't want to diminish their lifestyle, and so they end up selling the house to rent or buy two separate houses. The capital committed to that residence is much higher, and so it really, and this is across everything, travels, and it just the expenses increase. And I wouldn't say it doubles, but it definitely increases by a large factor. And so if you're already running on a tight budget, this will definitely kill, your already set aside goals that you had. You would have to alter them.
Yep. Yep. And I would also say, I would add a couple things. One is that there are actually a subset of financial planners who focus specifically on this. There's even a professional designation that my understanding is it takes a couple of years to get, and a lot of studies called the CDFA. So there's people who really know this. So if you're facing this, look for the CDFA designation. The second thing is when you look at balance sheets of people who have been married for even a short period of time or a longer period of time, there's never just a simple, you can't simply chop this thing in half like a sandwich and split it up evenly. There's going to be some operational things to consider there. So do you have a bunch of money in retirement plans would be a place to start. Or do you have money in illiquid assets as somewhat a business owner? There's a lot inside of there that goes into splitting up a balance sheet so that it's an equitable outcome, which I think is under our law, the main purpose or the main objective that, family court is trying to get to when they
Yeah.
are mediating divorces.
And then there's the aspect of if you have children who are not adults yet, and then that becomes an issue, right? Like, where do they stay? Who do they stay? Then one house has to be bigger than the other. If they're staying 2 weeks on each one, then you need two houses of equal size. It just becomes a complicated matter and a costly matter, and operationally very inefficient. So if there is any advice for folks out there, really, you try to work on your marriage before you undergo spin off. Um, so I really do think that most people should probably look at fixing their marriage before undergoing this, just from a financial perspective.
I would agree. Anything else on the divorce front?
I mean, there's a ton to talk about. I think that one complicating aspect is when they're in business together as well.
I would very much
That
agree.
is that is something complicated. Even a fact like normally when you're married, or normally every time when you're married, moving money from one account, like one person to the other for operational aspects is not a gift. It's not. It's just you're considered a one person. So moving money from like the husband to the wife for on a daily basis isn't a taxable event. But when you're actually divorced, they're two different people, and so if for some reason you have to give money for the purpose of something like helping her pay some bills for the kids and stuff like that, you just have to be very careful of how this is approached, because it could be considered a taxable gift. And then when you have business, if it's a sole proprietor or a disregarded entity, and what that means is that the ownership of the entity is between the husband and wife, you can file. It's much easier to file. But if you're then divorced, then it becomes a partnership. And so, from one moment to the other, now um, you have to file a different type of tax return. And that is something that people are not aware of. And then the distributions come in, and they have to be according to the ownership. It just creates a web of difficult issues that needs to be addressed. And then the other part is when there's unequal contributions to the effort of the business. How do you split the business up? What's fair? It just becomes so much complicated. Like those issues, I just wish they could go away. But if you want to leave with some golden nuggets here, don't get divorced.
There we go. Let's stick with that one.
Yeah.
Transitioning to a related but slightly unrelated topic. I had a couple of beers with friends this weekend. It's great to start seeing friends again post being vaccinated.
Are you
Really,
guys all vaccinated? Is it in your friends groups?
largely, yeah.
Good.
Um, but I had some beers with some friends that I hadn't caught up with in a while, and we got onto the topic of kind of just we were talking like economics broadly and state of the markets and working, right, working for a living and the prospect of retirement or building a portfolio that's big enough to support you. And we got on to kind of this thread of the boomers versus millennials in terms of what the setup was in front of them. And there's the meme that boomers turn 19 and get a well-paying job at the Ford factory and can immediately get a mortgage and finance a house and pay for two kids to grow up, right? Like support a
Yep.
family just through that booming economy and that the excellent demographics of the time, and that millennials are just given a totally different slate. So in this example, we were cooking up, a couple in their 30s, you get married, they got their first kid coming or have one kid. They still got some student loans. Maybe they earn well, but not hugely, a couple $100,000 between the two of them. Uh, if both couples are going to keep working, some simple math tells you that they get squeezed pretty quickly. Um, Making a couple hundred grand after withholding, those paychecks aren't enormous. Hopefully they locked in a good mortgage and are there, but between student loans and childcare, those two alone it just dawned on me how many people that affects today in a massive, massive way as far as family planning. And like, can young people in the US look at their earning situation, say, yeah, this is sustainable and I can afford to have children or the size of family that I want. And I knew that was true before, but this weekend kind of crystallized it for me.
Baby boomers, first of all, the expectation was always that, in many cases, I'm not going to say always, in many cases, was that the wife was going to remain home. So childcare was kind of solved for at that time, to better or worse. I think also the cost of homes were less expensive. There was a lot of help in terms of government loans, similar to what there is today. I think it covered more houses, and there was an unbounded optimism of the future, I would say, and the school was much cheaper. And if you think about the parents of the baby boomers, also, right, all those people who survived the war,
The greatest generation is what they're
the
called.
greatest generation, who survived literally how many calamities did they survive? Like if they were born in like the 1910s,
A lot.
they survived the Great Pandemic, right? Like that, the Spanish flu that literally killed like
Spanish
a ton of
flu,
people.
World War One, Great
World War
Depression,
Two,
World War
yeah,
Two.
Great Depression. Talk about like, those are real survivors, right? So, and I don't think I guess they counted their blessings. And then came the baby boomers, and they took it to another level. I want to say that yes, we have it. The millennials will have it a little bit more difficult in terms of financial things, but in terms of I would say life issues, life or death issues, we have it much easier. You can make things cheaper, like immigrants, people who are in different, I would say, economic strata, make it work. They do make it work. The issues that I think a lot of millennials have become accustomed to, a certain level of lifestyle that that if you add children to it will require or creates a strain on the economic situation. So we're not, I think millennials were not accustomed to saving like 40-50% of their income. And this is what I tell everybody. Like there are certain axioms in life that you have to live by. The first one is like you have to save for retirement, because the greatest gift you can give a child is not have them support you during your retirement.
I agree. That trade-off is not clear to a lot of people, but
No.
you look at some projections of your your future, and it becomes very clear that like
Yeah.
your retirement savings now are your kids safeguard in the future.
Exactly. And the second thing is, I would say after that, it's, education for the kids. I think that's a great thing, and nothing pays better than a good education. And then the final thing is, I think housing. The problem with housing is it corners you into a certain area, and sometimes it's good to move for a job, right? And so it creates an issue if you're an owner of a house and you can't get rid of it. It's a very concentrated investment, so I sometimes it's better to rent than to own a house. And owning a house is a sentimental choice for a lot of people, and in my opinion, it's not always the best alternative out there. On the other hand, for people in the deep middle class, owning a house, is probably one of the best investments they can make, as long as they want to stay there for a long period of time. And the housing market is appreciating.
This may be a hot button topic, so you can say no comment if you have no comment on it. But do you have strong feelings about, for your own family or for advising clients, about the difference in people who going from a dual income household, let's say both partners work, to someone stays home and does childcare full time? Have you evaluated those trade offs? What do you think about facing that?
I think there are. It's a harsh trade off when the person who's giving up the income has a career and the future prospects are much brighter, right? That's You're cutting off that train.
Growth. Mm-hmm.
Yeah, that growth, and it's I think it's really unfortunate, and it compounds over time, right? That decision. there are mitigating ways of doing this. One is if that person is also very entrepreneurial, they can start something at home and do something in the middle of the time. Like there's are certain ways of balancing these things out, so you can get the income stream from being at home. But most people aren't inclined to do that. It also creates a future potentially a strain on the relationship, in my opinion, because it removes a certain independence from one person. The person staying home becomes totally dependent on the other person in terms of financially, but that person is also dependent on the kids now.
As you're talking through this, a few things come to mind, but the main one is, thank goodness for this child tax care, what's it called? Tax credit, expansion of the child tax credit.
Yeah, I think it's key.
jumped a lot in a really big way. And remember, credits are a way bigger deal than deductions. Way bigger deal.
Yeah, I think it's very good to have that credit. That credit is, a lot of people decide not to have a third kid just because the cost. If you can mitigate the cost with more credits and other sort of benefits, I think people will actually choose to have another kid. And in all honesty, demographic growth is key for the survival of a labor force. So long term, it has a huge effect.
Let me pull on that thread real quick. So let's talk about someone who's going to have one kid versus two kids, and as a married filing jointly, let's say they make $150,000. So they're before any phase outs, right? They're going to get those full credits. What is that credit worth for your second kid in the first, 6 years? It's the first 6 years are a different number, right?
Yeah, it's $3,600 per child under the age of 6.
$300 more straight off the tax bill. And I know that they made a change in Congress to apply those early so that people aren't waiting till next April to feel the benefits of that.
What's the food cost for a kid? Probably not $300. If you have 3 kids, it's not $900 a month, right? But it is $400 for sure.
Yep.
And then you need I'm not gonna say extra care, but that money would go so far. That actually would go a lot far. There's a lot of cost of having a kid, and I think parents need that help more than anything. I would love to see the standard deduction. I would be in favor of even lowering it for normal people and just hiking it for people with kids. There's the cost of raising a kid is substantially higher. I feel like now than versus the 1950s and 60s. I think going to the public pool of my neighborhood is going to cost me $600 a year, right?
Yeah.
That's fine, but the pool is only open. It's for family, right? So, but if you're a family of 1 or a family of 3, it doesn't matter. But it's a cost. It's a consistent topic among people who are thinking of becoming parents and not yet. They become very, very anxious about the cost of raising a kid. I always say, go for it. Figure it out later. You can make things do. You can make things work. People live in tight places. Yes, it's not ideal in the pandemic, but
many great people were born and raised on extremely tight budgets.
I can tell you that, yeah. You know what's interesting? It's you have those, I don't know if famous CEOs that were born in neighborhoods that were not even middle class or lower income neighborhoods. Lloyd Blankfein, I think, was in and out public housing. There was a significant amount of the older generation who did not come from wealth. CRTs, which stands for Charitable Remainder Trusts, and you have CRATs and CRUTs. So Charitable Remainder Annuity Trusts, and it's fixed payments. You can think about it as fixed payments, and Charitable Remainder Unit Trust, I believe it's called, and it's for variable payments. And what the basics of a Charitable Remainder Trust, it's essentially a tool. It's a trust where you give money to a trust, you receive payments in exchange, and then whatever is left over, you donate to a trust. Is that correct? Sorry, to a charity.
Right. I always connect the words charitable and remainder when I hear charitable remainder trust. Charity gets the remainder. So this is a bolus of money that gets put into a trust. The purpose of the trust is that at the end, the remainder will go to a charity. you harvest some tax benefits along the way by making that election early, right? By saying, okay, this went into this trust. I'm going to treat it in X, Y, and Z way to follow the letter of the law. And at the end of it, a charitable organization, a church, whatever it is, will receive the remainder of the trust.
So then, why would someone create a charitable remainder trust?
I think the main benefit is probably for estate planning purposes. So if you have a very large estate, you can reduce the size of your estate significantly by using a charitable remainder trust, because this asset will be off of your personal balance sheet and your estate's balance sheet at the time you're passing. I'm going to say that's number one.
I would say you still receive an income, right? Which is
correct. Yes. So it's dual purpose for sure.
Yeah. I think the math works like this. It's more like, hey, I'm going to donate, let's say, $1 million to a charity. However, I want some income in exchange for that. I want to make sure that I'm not kind of like taxed on it. Explain the taxes situation about this.
Main piece here is that you are separating the income of the trust from the principal of the trust. The principal is what you put in. The income is the income generated from the trust. So for instance, in a CRAT, C-R-A-T, charitable remainder annuity trust, you're going to, and correct me if I'm wrong, invest in income producing a portfolio of some sort, take a distribution that I believe will be taxable to you, similar to how it's taxable in the trust. So if it's municipal bonds, those may be tax advantaged. If it's REITs, those may be less tax advantaged, et cetera, and pay tax on that income, but avoid tax on the principal amount. For instance, let's say you donated appreciated stock to it, you would avoid realizing the capital gain, but kind of translate this into an income stream for yourself, minimize estate taxes at the end, minimize capital gains at the beginning. The basic rule here, it's just basic rule number 3, income payout must be at least 5%, but no more than 50%. So it's meant to be a sustainable income payout and not a scheme in which you donate it to a trust and then say, oh, most of this I'm just taking back as income, right? That's not the...
And so how do you get that charitable deduction, which is key to this thing working out? The grantor of these assets, they receive an immediate income tax deduction equal to the present value of the projected remainder interest that passes to the charity. So if the charity is going to get, a projected $2 million, well, the present value of those $2 million is the deduction you would get at the beginning or at the continuation, over the life of that trust. And so, you can use that deduction over a couple of years, and it would protect you against, that income that's you're being given back. So we'll link to some graphs. It's very important to show. I would say it's much easier to show with like circles and triangles and like how the money flows and like, the description of that, how that works. And that will give you a good sense of an idea if it's for you. I think the key aspect here is like you have to be charitably inclined. You have to have, if you believe in a charity, if you want to give money to charity, but you still want to have money left over for you, then I think this is a very tax effective, I would say, structure, especially when you have appreciated assets such as like a land or a building or something that has appreciated a lot and you want to get rid of it.
Couple things here come to mind. One is people who just made a ton of money in crypto and are thinking about taking a portion of that and turning it into income to live off of, which is a translation problem that I think a lot of those people are probably going through, thinking of, all right, I got this big balance sheet. How might I translate this into income? This is a good framework to start with, to think about, would be a CRT, especially if you don't have, you have a ton of money and you don't intend to pass it on to family or whatever. This is a really interesting tax structure. The other piece is the limitations on charitable deductions. I believe at the federal level that you can't take more than 50% of your AGI, something like that.
Yeah, I
In
think
terms
it
of
changed. Yeah, I think it was a 1 year change recently, but yes.
Yeah. So a $2 million charitable deduction, if you only have 500,000 of income, is a little bit less useful than you might think. So this may be a strategy that's useful for chunking, meaning you're doing it in separate, making those deductions in separate years, or using multiples of these. And I know for a fact that I believe I saw someone on Twitter post this about Mark Zuckerberg has many of these charitable remainder trusts.
Because you're basically creating a waterfall effect.
Yep, using it over these different years where you have high taxable income and you want to offset that with charitable deductions.
I will say for 2021, you're able to deduct up to 100% of your AGI. And it used
Interesting.
to be
Okay.
60%. So, I mean, it's great.
And the trust itself is tax exempt, right? So what's happening inside the trust is not taxable to the trust.
Exactly.
So it's got a little bit of a Roth feel. It's like a Roth for charities.
Yeah, so if you're distributing around 50,000, I think the rules are like the first amount that's ordinary income gets taxed as ordinary income, like the percentage, right? And then whatever's left over is capital gain, and whatever's left over is return of capital.
Two hard places of the tax code that are really, really difficult to peel back are trust and partnership income. Both of those are.
For me, it's international. It's like beyond.
International is galaxy brain, but yeah.
Well, it was good to talk to you. We'll keep me in the loop of what you're doing.
I will, sir. Adios. See you next week. 2 weeks. Bye.